Bitcoin ETFs are sucking up 10 times more BTC than miners can produce. Spot Bitcoin ETF inflows have outpaced the amount of production from miners by over 10 times in the past 2 trading days. Spot Bitcoin exchange traded funds ETFs scooped up 10 times more Bitcoin than what miners were able to produce on Monday, February 12th. According to preliminary figures, at least 493.4 million, or roughly 10,280 Bitcoin, flowed into spot Bitcoin ETFs as February 12th. BlackRock's iShares Bitcoin Trust showed a lion's share with a massive 374.7 million flowing in. Meanwhile, Fidelity's Wise Origin Bitcoin Fund saw inflows of $151.9 million, with $40 million for ARC21 shares Bitcoin ETF. Grayscale outflows of $95 million and $20.8 million from the Invesco Galaxy ETF. So yes, I think it's time to get your Bitcoin off these exchanges, because look, if there's more Bitcoin being snapped up than they're produced, then what does that mean? That clearly means that a lot of these people don't actually own the Bitcoin. They're just trading things that they don't have, because it's the common thing, oh, you bought Bitcoin on the exchange, but you don't actually have it until you take it off the exchange. That's when you actually own it. So these people don't actually have any Bitcoin. They're just trading Bitcoin that they don't have until they actually take it off the exchange. A similar trend was also observed on February 9th for approximately 12,700 BTC, or $541 million, $500 million worth of the asset flowing to the ETFs in aggregate, compared to 980 BTC worth around $45 million added through mining. Clearly, there's a lot more demand than there is supply, so price might go up, but also there might be wait a minute, how can there be more Bitcoin being traded than being mined? Obviously, these are paper Bitcoin. Yeah, I need to get what crypto I have off any exchanges, but I don't think I have very little crypto. I think I have $50 in Ripple. BlackRock led the way with a 250.7 million inflow, while Fidelity again second at 188.4 million. ARC21 shares saw large inflows of 136.5 million, while Grayscale outflows fell to their lowest level for the week at 51.8 million. So what's this guy Pompliano? Wall Street loves Bitcoin. They are buying up 12.5 times more Bitcoin per day than the network can produce. The march to a new all-time high is underway if this continues. I explained this on my segment with Squawk CNBC this morning. Wow, new all-time highs. That's exciting. That must be good for the overall market. Okay, moving on. The Daily Hodl. 8,200,000 residents in California will play a major role in determining the future of crypto, says Coinbase. California's digital asset holders will play a big role in the future of the industry, according to top U.S. crypto exchange Coinbase. In a new company blog post, Coinbase notes that a 2023 survey from Business Intelligence from Morning Consult indicates 8.2 million residents in California, 27% of the state's adult population owns digital assets. Nearly 80% of those digital asset holders say they would be more likely to support pro-crypto political candidates, according to new polling by research from Tolona, which was paid for by Coinbase. In California, 78% of crypto owners believe policymakers should be supporting new, innovative, and disruptive technologies. They also would support candidates who say that a strong U.S. crypto industry will help future generations get ahead and increase access to wealth-building tools that the traditional financial system does not provide to many Americans. The Tolona polling shows 40% of California crypto owners are aged 18 to 34. Coinbase says younger generations in the U.S. have a larger appetite for digital assets than older generations. They grew up during the internet age and are comfortable adopting innovative technologies that make their lives easier. They want to see innovation continue so that they can move their money efficiently and autonomously without being weighed down by legacy financial institutions that define how their parents and grandparents manage their finances. Coinbase also says that nationally, the majority of younger generations in the U.S. favor candidates who support cryptocurrency. Nationally, a majority, 51% of millennials and Gen Z adults say they are likely to support crypto-friendly candidates in 2024. These voters will make up a vocal minority in the next election, and by 2028, younger voters will represent a majority of American voters. Cool. Next, we have this post from Chuck Portis. Buying is easy, selling is the hard part. So this is just his opinion. Let's read it, because I thought it was interesting. Just a brief post from a seasoned crypto investor. I saw a lot of people coming out of the last bull market and the bear market of 2022 regretting they held onto all their coins. They saw huge gains in 2020, 2021 and didn't sell near the top. Naturally, they wish they took more profits. In retrospect, the lesson learned was next time I'll take profit. Obviously, that would be a great play. In hindsight, selling ETH at 4,800, BTC at 60K, or 80 at $3. Most old coins fell 95%. BTC ETH fell 80% from highs. We think to ourselves, damn, I was too greedy. I should have sold more coins. Part of this is the benefit of hindsight. Yes, hindsight. At the time, some of these coins seemed clearly overpriced. Solana at $200, doing more than 100 times in the bull market. Plenty of 20x coins that really had no major usage yet. Near .88. Still, at the time, did you really think the prices were that crazy? Probably not, because if it was really that clear that the prices were going to crash soon, you absolutely would have sold them at the time. Truth is, when you are buying a coin, it's a pretty easy process, especially in a bear market. If you see a project you like, or even just a project you think will go way up in price in a bull market, you can use historic prices to see if it's a good buy. Take Ethereum, for example. Ethereum was trading as low as $900 in the bear market. Granted, that was during the lunar collapse, which was pretty scary. Still, you had multiple months where you could buy Ethereum under $1,500. You could also compare Ethereum to historic all-time highs and see its way down. I mean, it just came off $4,800 in 2021. Most people would say Ethereum BTC are the blue chips of crypto. That means they will lead any bull market. Without Ethereum Bitcoin appreciating the price, there will not be a bull market. So you can buy them without worrying they will be left behind the next cycle. Something you do need to worry about with alts. Look at Dogecoin, Ripple, for example. Anyways, by looking at historical data, you can see Ethereum was trading way below its 2021 high and even below its 2018 high. That should indicate that the price is decent. You can buy with confidence knowing you're absolutely not buying the top. Sure, it could go down, but it's already been beat up pretty bad. In every major cycle, the all-time high of Ethereum and Bitcoin have surpassed the previous cycle's all-time highs. So the potential profit for Ethereum, if it goes from 1,500 to 4,800 plus, is more than 3 times. Meanwhile, the most you can lose without leverage is 1x, and that's if Ethereum goes to 0, which is extremely unlikely. To sum up the above, you can use historical price data to make a smart entry on Ethereum, but how about selling? We just mentioned that each major cycle should be defined by new and higher all-time highs. So how do you sell something trading at all-time high? Well, historically, it is very hard to say. Ethereum went from $10 to $1,500 in 2017. If you sold at $100, you missed out massively, even though that was 10x all-time high. Meanwhile, in 2021, we only did 3x the previous all-time high. So how could you know the price was right? The risk of being wrong is watching a coin you believe in doing another 2 times, 3 times, 5 times, whatever. That is the worst situation possible. There is nothing more painful than watching other people make money on a coin you believe in while you are sitting in cash. It is painful to seriously underperform in a bull market. So people are naturally quite scared to sell. When you break into new all-time high territory, it is very hard to know when the music will stop. You don't have much historic precedence. You just need to feel the market and try to make a guess when enough is enough. Perhaps that links up to your own financial goals. Maybe you set a hard rule that you sell X percentage at X price. Either way, the idea that you're going to easily time the top and sell with confidence in crypto is a bit absurd. You will rarely feel good at the time when you sell a coin you believe in. Can you watch from the sidelines as it pumps up higher? If not, you're likely to jump back in a bad time. Happy to hear advice, comments on selling your investments. How do you do it? That was a good lesson. So now it's got me thinking about how I actually need to pay attention to the all-time highs. So my rule of thumb is that if a coin passes its all-time highs but then returns to its all-time highs and then goes lower, I should sell. If it returns to its all-time highs and then goes higher, I should stay in the position. Well, but that was a good lesson. It's good to just read these things to learn from other people, because the more we read together, the more we get knowledge, and the more we actually can put all this information together and actually make an informed decision. Because that's important. Okay, last one. Demand for Bitcoin levels off as price increases. Okay, this is important because we just saw a previous post by Pompliano saying that Bitcoin is sure to go higher because Wall Street loves it. But this person is saying demand for Bitcoin levels off as price increases. The law of demand states that as prices go up, quantity demand decreases. Often demand for Bitcoin is measured by how much new money is entering the Bitcoin market. For example, demand from ETFs is commonly described as inflows of X billion. On a smaller scale, one might have a DCA amount of X per month. When the price of Bitcoin increases, the quantity of Bitcoin demanded by those inflows decreases by the same amount. Therefore, increases in price will decrease the quantity of Bitcoin demand with a unitary elasticity. Simplified. Another economics lesson. So let's listen, because I think this is actually a good point, because everybody's caught up in the hype like, oh, ETFs are making Bitcoin more valuable, more wanted. But this person is saying, wait. Based on the law of supply and demand that was created before we were born, the opposite should be true, which is that demand is lessening for Bitcoin as the price goes up. Example, 1,000 per month buys 1/20 of Bitcoin at 20,000 USD BTC. 1,000 per month buys 1/40 of Bitcoin at 40,000 USD BTC. Here's the quantity of Bitcoin purchasable with $10 million. Okay, so yeah, with $10 million, you can obviously buy less and less Bitcoin. That's right. As you can see, the curve levels off as the price of Bitcoin increases. The higher the price gets, the less dollar amounts inflowing into the market affect quantity demanded. When the price is low, a small change in price has a significant impact on quantity demanded by a set inflow, and when the price is high, a small change in price has minimal impact on the quantity demanded by a set inflow. There are some stipulations, of course. Price discovery happens on exchanges and there are a lot of other factors involved in that process, but the basic law of demand holds true. Yep, the law of supply also holds true for Bitcoin. As much as people argue that the supply curve is inelastic, the supply that matters for price discovery is supply on exchanges. As the price increases, the incentive to sell increases. As the price increases, the incentive to sell increases. So the incentive to move Bitcoin from storage back to exchanges increases. As such, Bitcoin supply on exchanges is not inelastic. Supply is also not limited to new mine supply, and supply that exists in wallets can become supply on exchanges. Oh yeah, that is true. That is true. It's not just about the supply that's being mined, it's about supply that people actually have. Bottom line is this. As long as Bitcoin's primary use case is a place to store USDC, and as long as USD doesn't fail, the price in terms of USD BTC is soft cap. Cap grows with inflation. Don't expect exponential growth in price after some resistance level is broken. I'm not claiming to know where the soft cap is. We've seen the potential of Bitcoin to reach 69,000, which today would be 80,000 plus. So the potential is there, but it's also probable that prices significantly higher than this represent a bubble that will pop as more sellers enter the market. Food for thought. Okay, if you enjoyed this, please leave a comment, like, share, subscribe. Let me know what you all think, and stay tuned for tomorrow's news.